In this video, I'll discuss Q1 FY26 result and Concall of L&T Finance. So L&T Finance is an NBFC. They have multiple products, like 30% of their AUM comes from microfinance, 20% of their AUM comes from housing finance, then 16% comes from farmer equipment loan. So that is their main product portfolio. And then in the last quarter, in Q1 FY26, they also acquired a gold loan company. So that is the thing. In terms of the retail portfolio, like in FY26, 60% of their AUM was retail portfolio, but in the last 2 years they have been able to reduce their wholesale book, and now their retail portfolio is around 98% of their overall book. So in that front, they have done a really good thing, that they reduced their wholesale book. As we all know that retail financing is the best financing. Okay, so that is the thing. In terms of their geography, they are present all over India. They are 56% AUM comes from the urban India, and 44% AUMs comes from rural India. So that is the thing. Rural India means they have microfinance portfolio, they have farmer equipment loan. So that is more of a rural India portfolio. And then urban India portfolio is like home loans, personal loans, loan against property. So that is the thing. In terms of their result in Q1 FY26, if we look at their AUM, in this quarter they grew their AUM by 15%. Their overall AUM grew by 15%, and their retail AUM grew by 18%. Okay, so if I talk about the AUM growth, it is pretty low if we compare it to other companies. Like in NBFC segment, in NBFC sector, we have multiple companies who are growing at 30, 40, 50%. Okay, so if we compare it to L&T Finance is growing at pretty less run rate. So that is the point. Yes, those companies have lesser AUM, but because L&T Finance have a 1 lakh crore AUM, whereas those companies which I am talking about, like they are growing about 30, 40, 50%, they have around 10, 20, 30,000 crore of AUM. So but if we look at the market always rewards the growth, not the size. Okay, so that is why I am saying that the growth is pretty low if we compare to other good NBFCs. So that is the point. In terms of their disbursement, in this quarter they grew their disbursement by 17%, which is a good kind of a rate. I will not say that it is a pretty bad, but yeah, that is the thing. In terms of the asset quality, GNPA and NPA number has been stable over last 8-10 quarters. So in terms of asset quality, they do not have any kind of issue. The asset quality is moving little bit upward, but yeah, that is the thing. That is the condition of the whole industry, that everyone is facing some kind of issue in some region and all. But overall, if we look at their GNP and NP number, it is pretty stable over last 8-10 quarters. So no issue in terms of the asset quality. And if we look at the commentary of the management, that what the management said in the Concall of Q1 FY26, in terms of their Karnataka MFI portfolio, they are seeing improvement in Karnataka for last 1 quarter. Like they have said that in July they have seen improvement quarter on quarter and month on month. So that is a very good thing. That is a very important thing also, that Karnataka MFI, the Karnataka microfinance portfolio is coming back, but they are expecting it to stabilize by October 2025. So that is the point with Karnataka portfolio. And if we look at Credit Access Grameen also, in their investor presentation, they are also showing the similar kind of trend that after February 2025, it has been improving month on month. So yeah, L&T management is also saying the similar kind of thing, and the management is saying that improvement is the result of the good monsoon which is happening in this year. So that is the point. All over the India, if we look at the monsoon in this year, that has been very good all over the India. So that is why the rural India also coming back because of the high like farm income. So that is the thing with the asset quality. And if we talk about the credit cost, in this quarter their overall credit cost is at 2.23%, but if we look deeper into it, you will realize that it is not right that they are having a 2.23% of credit cost. It is far higher than this, because in this quarter they used 300 crore buffer provision, and that is why the overall credit cost is lower. So that is the point. And in the last quarter also, in Q4 FY25 they used 300 crore of buffer provision. In Q3 FY25 they used 100 crore of buffer provision. So if we exclude that buffer provision, then we will realize that the credit cost is far more higher, is at around 3 credit cost x buffer provision is at 3.3%, okay, whereas the overall credit cost is at 2.23%. So that is the point we have to look at, because we should look credit cost at a overall level. We should look at the credit cost at a real level, not the overall level, because overall, if we look at their buffer provision they used for their some kind of delinquency in MFI and all, it will not say the real thing. So that is why we have to calculate, we have to see the real credit cost they are having. So that is the thing. And if we look at the management's commentary, then the management is saying that the credit cost will be at, like, they can reduce the credit cost to 2.3 to 2.5% by Q4 FY26, whereas now it is at 3.3%. okay, so in terms of credit cost they are expecting an improvement in next 3 quarters. So that is a good thing, because all they said in the MFI segment that they are seeing some kind of improvement in Karnataka and they are getting very good response all over the India. So that is why they are expecting a better credit cost in the next few quarters. So that is the point with credit cost. In terms of the PAT, in this quarter they grew their PAT by 2%, okay, which is pretty low. And if we look at their AUM growth, they grew their AUM by 15%, whereas the PAT grew by only 2%. So they are not getting any kind of operating leverage. So that is also a negative thing in their company. So that is the point we have to look at, because if there is no PAT growth, then how the shareholder will get the reward. So that is the thing. And if we look at their valuation, for me, if there is no growth, if the growth is very low, then there is no point to see at their valuation. Okay, so that is the point I would like to say. So that's it for the video. Thanks for watching.